What is up with the market right now? Let me see. 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 What is up with the market? It's so easy to become a podcaster with Riverside. First, don't lie to these folks. It's not so easy to become a podcaster. Why they be lying to these folks like that? We've been doing podcasts for like 5 years since before COVID started. That shit's not easy. Or 1%, but here's the there we go. There's crude oil. Crude oil is dropping. That mean the market going to run. We might, honestly, I ain't gonna lie, we might be going into a little bull run like quick. Just right quick. I don't think it's gonna be long lived. Because we already ran. You gotta think we already ran. Like the market already ran, cause it's gonna be hard. I think it's gonna be hard for us to sustain this, especially with Trump. So, you know, man, this nigga Trump, he don't give a shit. He like, listen, yeah, what's up, Country Bell? Yo, man, listen, man, Trump don't give a dang. He don't give a goddamn, you hear me? Like, he gonna do what he gotta do for him and his family. Listen, I ain't mad at him. I'm setting me and my family up. Yeah, I'm setting me and my family up. What's up? 3, 2, 1. How? Hey, Country Van number 1. Yay, appreciate you, bro. Appreciate you. Where you from? Where you from, man? You investing in the market today? What's going on? What you getting into? Because you on fire on the interactive, Lee. You're always on fire too. I guess it's bull market on, right? The bull market's on. These motherfuckers got all the money. Man, I know I'm cooler than these niggas. These niggas be the ones talking about all the bread. These niggas, look at these niggas. Like, I know we cooler than these niggas. Like they really can't mess. It's just we so intimidated by the market. Don't got here no suit and tie on and all that shit. When we got into that corrective territory, but today I gotta break everybody's heart. I'm taking my overweights off. Yes, break hearts, baby. That's why I'm glad you showed up. Because I need to bring reality to I hope y'all investing this week, man. The markets is running. You hear me? The markets is running. This war is over. It's not over. We still have a bunch of long tail from input prices from the slowdown in general. All right, Country Bell, appreciate you for being here, bro. Catch you next time. Any type of listen, man. That we're going to do is going to take months and months and months. We haven't had forward guidance from most industrials. Okay, we just had some slower guidance from Netflix. Yeah. But what's going to push us? Let's talk about Netflix earnings. Everybody talk about Netflix earnings. Netflix had great. I said Netflix was going to have great earnings, and I said, well, let me talk, y'all. Let me see so y'all can see. I told yo, man, and that's crazy because it ain't about being right, but it's about knowing what. That's why I want y'all to study the game because it's so easy when you see the shit coming. Because I knew Netflix was gonna have a great earnings, but I had a feeling the stock was gonna fall on the news because what happened was forward guidance ain't looking good, their future ain't looking good, and I keep telling people the stock market is a forward-looking indicator. If you heard the news today, they are using you as liquidity. If you heard the news, I'm telling YouTube and TikTok, if you heard the news today, they're using you as liquidity. Like, they like, oh yeah, yep, this going up. And you can be like, oh yeah, I'm buying it. As soon as you buy it, because this is what we don't understand. When you buy it, somebody is selling it. So somebody, oh yeah, it went up. Oh yeah, good looking. Cash out on you right quick. Go on vacay. And you don't even realize, and now you stuck over the bag and that joint just dropped. Because they use CNBC and Bloomberg and all that. That is their marketing. Like, that's how they bring in the bag. And like, so once you know the game and once you know where to look, you ignore what they talking about. You just look and see where the money going. Like, yeah, let me see where they putting their money at, and then you're gonna realize, oh, all right, now you know what's real, what's fake, and all that. Because the CNBC ain't nothing different from the Fox News and all that. That shit ain't nothing but marketing, bro. That shit ain't nothing but a marketing campaign. So don't get caught up in that bullshit. Netflix is a great company. Netflix had great earnings. Netflix just don't look good for the end of this year. You think Netflix ain't gonna be around in 10, 20 years? You acting stupid. You're gonna be mad. You're gonna be mad. When I seen Netflix, what was that? Like under $88. When I seen that, I said, oh no, they are tripping. I started taking a little money out the savings account. Let me buy some shit, put it in my kids' custodial account. Like, cause I know when my kids grow up when they 20, Netflix still gonna be around. They're gonna be happy as hell that I bought these Netflix shares for them. Cause these $100 Netflix shares in about 15 years, them Jones gonna be crazy. They gonna be they have hundreds of them joints. They gonna eat just off Netflix. Not to mention the other stocks that I got in the portfolio, but it just goes to show it don't take a lot, bro. It don't take a lot. Motherfucking SanDisk. We can talk about SanDisk. Look at this stock, bro. Like this is the life changing stuff that I'm talking about. Like this stock, if you could just been buying this for your kids, because let me see what this stock was last year. It was like $50 something. I did my own study a couple days ago on the S&P 500. It was $125 last year. This was $125 October 7th, 2025. And look how much this shit is. Those times were look how much do you see it? November of 2020. Like, do you not see it? March of 2000. That was a terrible signal because it would take 7 years to get back up to $900 today. Nine for one share. Do you not see right here? $100. Bro, you gotta be kidding me. This was $125 in October. October, November, December, January, February, March. It's 7 months, bro. And you would have been up. I don't even know what percent that is. $100 to $900. I don't even know what percent that is, bro. But just think about it. Did you not have $100 in October? And 7 months ago, did you not have $100? If you would have put $1,000 in that joint, you would have $9,000 right now. If you could use $9,000 right now, I would just put a 9 in the chat. If you could use $9,000 right now. Hey, Marissa. Hello, hello. My day is going very well. I'm just showing people, man, the power of investing, the power of this right here. So, if you think Netflix, this stock right here, if you think this will not do that over the next 2, 3, 4, 5 years, you're acting. You're just misguided. You're just misguided. Just to say the least. Absolutely amazing. Like, look, $96 for Netflix stock that just had great earnings. Balance sheet is great. If you not buying this next year, you can't say like, "Oh no, I ain't got no break." Because if you just buy 10 of these joints right now, that's a stat. And just buy 10. Now I'm just gonna get 10 shares of Netflix. Next year, when it's worth, or in a couple years, when it's worth double, now you look like, oh, man, let me take my $1,000 out and still keep your $1,000 in it and still have 5 shares, but the shares didn't double. It was 200. Like, and that is the name of the game. This is the great equalizer, man. Once I found out about this game, I said, yo, it's game over. It is game over because it is the great equalizer, man. It's the great equalizer. Once I knew I could invest, like I could get my direct deposit directly in my investing account. Oh, I already told the story about that, but I'll tell it again for people here who might not know. Like when I was investing my check into my stock account, like direct deposit into that joint. What the fuck is wrong with this? Always some technology shit. When I was investing that shit, bro, when that shit after like 6 months, when that shit got like to $500, I wasn't making nothing. I was making like $300 every week or something dumb small. Like we're getting paid pennies, making like $300 a week. And after I paid my bills wasn't nothing. So after I paid all my bills and something, I had like $5, $10 in that account. But over 6 months of doing that and leaving that $5, $10 in that account, and that joint turned to like 500. Yo, that light bulb went off in my head. Like, hold up. If I'd have been putting $100 in this joint would have been how much? Like, and it hit me, and that's when I learned about opportunity costs and all that. Like, oh, that not putting that money in there really cost me $10. I could have hit $10,000 years ago. I could have made $10,000 years ago. Hey, what's up, Marissa? How are you? I'm doing good, baby. I could have hit that years ago, but I didn't understand it, and I didn't understand compound interest. I put I might have only put like 4 something in it, but the fact that my money made money, that never happened to me before. I never put money somewhere and then it was more money than I put in there. Like if I went to the bank and I saved $500, next time I went to the bank, I don't give a damn if it was next year. It's gonna be $500 in there. You know what I mean? But the fact that I was putting $5, $10 in there over 6 months, I was getting paid every week. So it was like $5, $10 going in there like 4 times a month, and I didn't realize what that was going to do. And that shit jumped up, and I got that one check, and it was like double. Like I was only getting paid like 300, 400, and it was like 700 in that account when I got paid. And I was like, oh snap, what happened? What's going on? Because certain stocks had went up, the joints appreciated, and I was like, oh snap, and that's when I stumbled across this. Like, oh yeah, I got to start investing. And then I started looking at companies, and then companies doing what SanDisk did, and doing what Nvidia did, and I'm like, yo, so this is the great equalizer. You lay your base. I just did a episode on the index funds, so that's coming out on Sunday. Make sure y'all tap into that. I went over index funds, but you build your base with your ETFs and your index funds, and then you start dabbling into your individual stocks. And once you're doing that for a year, you're going to hit something because you're smart. You here with me. You want to study. You ain't just going to jump into stuff because the internet is hype on it. No, you want to actually do your homework on it. And then when you get one of them NVIDIAs, you get one of them SanDisks, you get one of them joints, you gonna be like, oh, bet this what it's about, and something gonna click, and then you're gonna get in. You're gonna make sure everybody in your household got an investing account. You're gonna make sure you investing for people. You're gonna make sure you telling people. You're gonna make sure you're more diligent on that just $5 that you spending every day for this. Like you're gonna be real diligent and real aware. Like, hold up, I could be doing a whole lot more than this bread we just spending this with this. I'm gonna make sure I stack this over here. So now when I'm spending this with this and I'm really having fun over here, I really can enjoy myself. Like I really got all my shit set up. You know what I mean? Marissa, what's up? 6'7". What's 6'7"? What is 6'7"? Tell me what 6'7" is. I don't like that 6'7" shit. That shit sounds like some devil shit. Like 6'7". You're like, what? What are we talking about? What are we talking about here, man? What is we talking about? What's up, Dre? What's up, y'all? Is y'all happy with your portfolios today, man? Y'all is happy as I am with the portfolio shit. The portfolios popping. Nigga, passive income is the best income ever. Nigga, I ain't gotta work, nigga. I woke up. Nigga, woke up rich. I can't wait to that feeling. Nigga, I woke up. I went to sleep rich and I woke up richer. Yo, straight up, man. Straight up. No, that's what it's about, man. That's what it's about. I don't like that 6'7". Erase that, Marissa. Yeah, Marissa, I don't like that. What is that? What do somebody break down the 6'7" shit for me right now? Break it down. Break down 6'7". What does it mean? Somebody tell me. Yeah, I'm not that smart. Not that smart. Smart enough to know I ain't that smart.
It's so easy to become a podcaster with Riverside.
No,
First, go to Riverside and open an account.
You're a
When
liar.
you're ready to record, just hit rec to.
You're a liar.
Got a double deuce.
Right, the Russell 2000.
What y'all invested in? What y'all looking at? Any stocks y'all looking at?
500 and the NASDAQ.
I just
so
gave
far this
like
year, as well as over the past 6 months.
Sunday school and that Financial Friday. You make more tap that. I just gave out like 20 stocks today. I gave out about 20 stocks today, bro. I ain't trying to hear nothing. I'm not trying to hear nothing. No, I ain't got but you got some bread. Like, I gave out at least 20 stock picks today. Don't get used to it. You know what I mean? Because you gotta settle. You gotta watch it and see what these joints do. But 20 stock picks today. So make sure y'all tap into that Financial Friday episode. Make sure y'all definitely tune into that Sunday school episode coming up on Sunday. Because boy, oh boy. Oh yeah, make sure y'all tap into the I'm getting notifications like a motherfucker. Make sure y'all tap into the Buck Bandit Podcast Network. We just did an episode with Cooley from the No Fugazi podcast. Shout out to Cooley. We got another episode coming with Tyler Chronicles. You know what I mean? Y'all probably know him from Wild 'N Out and all that. Dude, this year a lot of stuff, yo. A lot of stuff is happening this year, yo. So make sure y'all stay tapped in.
Sarah, what's the fixed income conversation you're having with your clients these days?
So, it's interesting. I think there was a lot of, not hype, there's never hype around bonds, I would say, but there was some excitement around bonds, entering 2025, as we all knew that interest rates were going to come down. So at that point in time, the story was, okay, if you are a bond investor, you want to be locking in interest rates now because they're the highest that they've been in years.
What's
So
up?
lock in these interest
How
rates.
your portfolio's looking today?
Lower, that means that your bonds are going to appreciate in value. And that's exactly what we've seen over the past 2 years or so. It's been a great environment for bond investors. I would say some of that luster has gone away a little bit. There isn't as much, excitement surrounding bonds, but we always, we're still reminding our income-oriented clients, those who are retired, they need income in their portfolio. They also need stability. We have to remind everyone that if you look at the stock market over the last 3 years, it's up over 60%. Yes, there's still a lot of reasons to be optimistic, but if you're someone who's spending down your portfolio or you need income, bonds are still a great place to be, and especially after the run-up in yields that we saw, from the start of the year, it might be a good time to lock in yields again.
Sarah, very quickly before we let you go, how concerned are your clients about what they're hearing? And I say hearing because there's usually headlines about private credit.
Great question. It feels like we're fielding questions about private credit almost every day. Because look, we do believe that private credit is a good place to be in a portfolio. No, you don't want to be over allocated to it. Yes, it is an illiquid asset class. You might have been sold the story that you have quarterly liquidity, but that's only up to a gate, which a lot of investors, as you know, are learning right now. So, we've been in contact with a lot of the private credit issuers. To date, it still sounds like the loans are performing really well. They're optimistic on the underlying investments, but you still have to be selective as it relates to the issuer. So for some of those larger issuers that we work with, we're still very comfortable being invested in those portfolios. But I know that there are a lot of, smaller issuers out there. We're not involved with them, where there are maybe some concerns about loans, but more so than not, we do feel at this point in time, a lot of it is headlines.
All right, good stuff. Sarah, always a pleasure speaking with you. Sarah Ponczak is First Vice President of Wealth Management at UBS Private Wealth Management. Senior Vice President. I'm sorry, we did not promote her.
Promoted again.
Oh, there you go.
That's how good she's doing.
Sarah Ponczak, one of our favorites here
Yes.
at Bloomberg. And as she was talking about it, now you have a market that is on fire at the moment. The S&P 500 at a record high, up 1.25%. The NASDAQ also gaining to a record high, up 1.5%. And this comes as oil prices decline. Iran basically saying that the Strait of Hormuz is open. And President Trump just now saying that Iran has agreed to an unlimited suspension of the nuclear program. We'll have more details as we get them. But that is the latest headline here on Bloomberg.
The market really going on that news. Market really going on that news. Holy shit.
Whoa.
What's that?
I just built a budgeting app in Base 44.
Guys, Nina just built an app.
Impossible.
Nina can't code.
There's a record number of people turning 100, and that number is expected to quadruple in the next 30 years. So how do we harness that productivity, address the challenges, financial and other, but meet the opportunities as well?
Is the reality, Brooks, that people are just going to run out of money in their retirement? And for people that have planned diligently for years, they think they're set up for success. But if they're living to 80 to 90 or even 100, like you're pointing out, I can't imagine they've planned accordingly.
Well, first of all, we just came out with something called the Longevity Preparedness Index, which you can see on our website, that did a survey of Americans of how prepared are you to live extra years, these extra decades, really. And everyone always asks that question about financial. And to be honest with you, that is a challenge for Americans. And in my industry, financial services industry broadly, and of course, public policy has to be set to
over
encourage
400 again.
more
Yo,
savings earlier.
yeah,
And I understand the reality and challenges of people, struggling right now to fill the gas tank. A little easier, hopefully, after today. But that there are real challenges there. But it's not just about financial. So yes, we need to lean in on that.
Yeah, we
but
might be
one of the
out
big
this
drivers of how
motherfucker right
financially
here.
secure you will be in those older years is how healthy are you. Number one concern of retirees: will I be in good health in retirement? Number two is, will I be able to afford my health care in retirement? So we're trying to lean in and help Americans not just live longer, but live more healthy longer while saving. Because if you're more healthy in those later years, guess what? There's going to be less financial pressure.
Brooks, we are still living, despite the pullback in oil prices today and hopefully gas prices soon, we're still living in an inflationary backdrop for so many things. How much have you had to increase prices for plans this year because of everything going on in the world?
Tech might be back, man.
Yeah,
and
Brian,
tech is back.
we're in somewhat of an enviable position.
Big
Our
money
company
rushing
turns
back into tech.
164 years old next week.
The market
And
is
we tend to have
definitely
very
gonna
long
push
duration liabilities that we
higher.
match with long duration assets
Robinhood is back to
and
$92.
subject to
Did I not
relatively
just
near
say
term. I
they
guess
had
I would
the
say we
stupid
take a very
British
long
junkies
term
over
view
here?
of things. So
At
while I'm extremely sensitive to the
7.69.
impact of higher gas
Last
prices, which
week, I'm
affects
like, yo, they
so
had
many
stupid.
consumers
This
right
joint
away,
really cheap.
for our
This
business
back
and
to
the
92.
pricing of our business, the profit profile and so forth, they tend not to be overly influenced by what we would call near-term factors. We tend to look at irreversible things and reversible things. And I would say what we're seeing today, hopefully, is the beginning of something that was reversible. There was this near-term period of conflict and disruption, and hopefully today represents the beginning of the unwinding of that and a return to normal, which is sort of what we price for and offer to our customers over a very long period of time.
Lastly, Brooks, before we let you go, the mortality rate for the industry, I mean, we've seen this go up really since post-pandemic, and it's been a headwind to the life insurance industry. Are we beyond the worst of that? And by mortality rate, I just mean more people are dying.
Yeah, well, I mean, certainly COVID represented a blip. But I mentioned at the beginning of my remarks this incredibly powerful, almost nonstop upward trend in life expectancies in the U.S. There was a blip in 1917 for the Spanish flu. There was a blip in 2020 and a couple years after associated with COVID. It's my belief, based on what I'm seeing, that is normalizing. And frankly, I'm bullish on longevity and mortality long term. You just look at the science and technology that's out there. Many of these companies we partner with to bring their services to our clients, full body MRIs, multi-cancer early detection tests, all sorts of new cardiac screenings and things like that. We will all be so much more empowered around our personal health that I think you'd be very wrong to bet on continued extensions in life expectancy in the future.
All right, we'll leave it there. Happy birthday next week to you and the team. Brooks, good to see you. We'll talk to you soon.
Thanks, Brian.
My Opening Bid Unfiltered podcast keeps steamrolling through doors to get you access to the biggest names in corporate America and
Do you owe the IRS $10,000 or more in back taxes? You may qualify for the IRS Fresh Start program. If they'll
recognize its products in the supermarket, such as Baby Bell and Laughing Cow Cheese. Big fans of that. Lots of protein in there. I think you are about to see an innovation burst at this company, thanks to Peter, who is the former CEO of Impossible Foods. You can catch these episodes on Yahoo Finance, YouTube, Spotify, Apple Music, and Amazon. Julie Hyman has you next on Market Catalyst. Have a great weekend.
Back to $92. Just say something about this. If you ain't buy this back here, when I said something about it last damn week. Yo, this is crazy. This is crazy, baby. I don't know what to tell y'all, man. This is message is really simple. It's the great equalizer, man. It is the great equalizer. You just start putting some of your check in this journey every week. next year, you're gonna look like holy smokes.
Talks over lasting agreement will, quote, probably be held this weekend, the president said. Bloomberg Balance of Power with Joe Matthew will bring you all of the details in just a few minutes.
Chipotle. What they doing today?
Jen, let me get to another deal that's near and dear to my heart, which is Paramount Skydance.
Yes.
Acquiring Warner Brothers Discovery.
Look at this.
Mega deal in the media space. What are the regulators going to say about this?
Well, in the U.S., they've already spoken, and they said, we're fine with it.
Nice.
Yeah, I mean, the Department of Justice allowed the Hart-Scott-Rodino waiting period. That's the period the companies have to wait before they can close to allow for antitrust review. They allowed it to expire. Now, I've seen news that some subpoenas were sent out since then. I don't really think that means much because in the U.S. right now, legally, the companies can close. The reason they haven't is because they're waiting for Europe and UK, which also have jurisdiction to review the deal, and they cannot close until they get that. But I'm not so sure that the European regulators are going to have much of an issue with this because the impact is more on the U.S. in terms of labor and putting together those movie studios.
But we know that there's a lot of opposition, especially in the Hollywood creative community, to this deal. In fact, more than 1,000 Hollywood actors and screenwriters have, written this letter of opposition, really pointing out the harm that it will do. The goal, according to these folks, is to get state attorneys general to stand up and oppose this deal. Does that have any legs to it?
Absolutely. The states, as I said, can enforce the same antitrust laws as the Department of Justice. And they've been talking for several years now about stepping in. If the new Trump administration was lax on antitrust enforcement, they would step in and pick up the mantle and run with it. And we're seeing that they've done that. They have a lawsuit right now pending against the Nexstar Tegna deal, which was also cleared already by the FCC and the Department of Justice. And if they get enough pressure, if there's enough consumer concern about the Paramount deal, I could see the states bringing a lawsuit, and they have a shot.
30 seconds, Jen. There was a story recently, United and American Airlines getting together. There's no way.
I think no way. Textbook anti-competitive. Of course, I said that about Sprint and T-Mobile, and that deal got done. I think that it's just posturing. I don't really see that deal coming together. I think even if there's lobbying to the Trump administration, I don't know how the Department of Transportation or the Department of Justice clears that deal without massive divestitures, and I don't even know if that's feasible.
I mean, Travel and Spirit weren't allowed to get together, and I know that was under a different administration. If you put together American and United, that becomes the biggest airline in the U.S.
by a lot.
Yeah, it's just extraordinary. So there's a lot of deal flow out there, and so for the M&A bankers that were expecting this administration to be supportive, that's a pretty good assumption.
You know who's at the top of the league table? Goldman Sachs.
Oh, of course.
Same as last year.
Of course.
Exactly. All right, Jen, thank you so much. Jen looks at the legal league table.
There you go.
Exactly.
All right, more on that later on.
All right, Jen Reese, Senior Litigation Analyst with Bloomberg Intelligence. Appreciate getting a few minutes of your time. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metal. Stay tuned.
The 89 line down.
Your top stories and global business headlines are coming up in just a moment. Balance of Power with Joe Matthew. Boy, are they going to have a chance. I just said rip up the script, Joe. Just bring us
Pretty much. The gains in equities are just piling on right now. The S&P 500 now up 4.6% so far this week. It's third straight week of gains of at least 3% on a weekly basis.
Right back at you. Hold up, bruh. You ain't just gonna sell me off like a chimp. Yeah, it's crazy, man.
This is CBS News on the Hour, your home for original reporting.
I'm Steve Kathan. Iran says as long as a ceasefire holds, the Strait of Hormuz will be open to commercial shipping. The news sent oil prices lower and stocks higher. CBS's Natalie Brand at the White House.
The president says the U.S. military blockade on Iranian ports in the Strait of Hormuz is not changing for now, will remain in effect until a deal is 100% reached. That's what he said in his initial post, applauding this news by Iran to open the strait to commercial ships.
President Trump also indicated on social media the U.S. would help Iran remove undersea mines in the strait. Well, it comes as gas prices do drop a bit. AAA says the average price for a gallon of regular is now $4.08. A week ago, it was $4.15. CBS's Lana Zach is in Iowa City, Iowa.
There are a lot of people that I've spoken with that feel their patience has really run.
Imagine being able to build anything just by thinking about it. Meet Base 44, a complete.
Let's take a check on oil prices as well, because obviously they're very reactive to what is going on there. And indeed, we see WTI down by 10% and trading closer to $80